JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 19th of May 2020, so yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts that we looked at yesterday, just to see how everything's getting along. But before we do that, as always guys, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, before we jump into the charts, as always, let's quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So I believe you can find something useful here for yourselves. Now then, quick update on what's happening here globally in terms of the coronavirus. So yep, the figures continue to rise, unfortunately, but if to trust this table here, you can see that Brazil overshot United Kingdom and jumped into third place in terms of total amount of infected. Of course, the total amount of deaths still are the highest ones are in the US and the United Kingdom. However, yep, the total amount of infections, that's Russia and Brazil kind of took second and third place respectively. So we'll continue monitoring the situation, of course, but yeah, for now that's how it is. And as I mentioned yesterday, basically will be, to be honest, very interesting to see if we actually can reach the 5 million mark by the end of this week, but something tells me that this could be possible. So yep, let's continue monitoring this. Now then, jumping into a few indices, quick update here. Still the same analysis applies. Yesterday I talked about this one in my videos, in my Espresso and Tea Time. I talked about the German DAX, and what I was saying that in a way, as long as excuse me guys, if this downside line gets broken, then yes, there is a good chance for this one to drift further north. To get a little bit more comfortable with higher levels, we would like to see a push above the April high, and then yep, target further upside. For now, looking at the cash index, we can see that the price is currently balancing at around 11,105 territory. So basically not far from where it ended the day yesterday. So, but still below this barrier. So we need to see a clear break above this in order to aim for higher levels, because this would confirm a forthcoming higher high, and in a way could also would also place the price above the 100 EMA here on the daily chart. In terms of the downside, the same idea applies still. In order to get comfortable with slightly lower levels, we would like to see a daily close below this 10,280 zone. As you can see, previously it was acting as a very good area of support. It kind of kept on holding the price from dropping lower. I mean, we did get a few false breakouts here, but and didn't really manage to kind of stay comfortably below this territory. So that's what we would like to see here. We would like to see a nice good daily close below this area before considering lower levels. The FTSE 100. So the FTSE 100 well, is pushing higher. I mean, we've managed to also break this downside line and stay above it. However, we also need to see a nice good clear push above the April high in order to aim for higher levels. So again, for now, the same basically idea applies as on the German DAX. We need to see a push above the highest point of April first before kind of we could get comfortable with higher levels. In terms of the downside, we'll start considering lower levels if we get a drop below the 5,702 territory, and if we get something like that, then yes, we will start looking at some lower levels. However, for now, it seems that the downside could be slightly off the table, but if you're more on the cautious side, wait for a push above the April high. Now, quick update on gold. I talked about this one yesterday, and basically I was telling you guys to keep a close eye on this 1763 territory, which is the lowest, the low of 1st of October 2012. There we go. I've managed to memorize this one. Basically, what I was saying that yesterday in my video, I was saying that if this territory provides decent resistance, then we could see a bit of a retracement here, maybe even back to this upside support line taken from the low, the 20th of March. And as you can see, we drifted lower, kind of came close to this upside line, and today, this morning, we're seeing a bit of a rebound here. Still, I would say as long as we remain above this upside line, then there is still a good chance for this one to push higher. So basically, this arrow here kind of shows the potential trajectory. So half of it has already been accomplished. So let's see if the other half push higher will be done as well here. So, but if you're more on the cautious side, you could wait for a push above the 1763 territory, and then can aim for higher levels. And now higher levels, the next potential target for us is around 1795 territory, because that's the highest point of 2012, and this could be quite interesting to see if this level could get reached maybe this week, maybe by the end of this month. So let's see how all this is going to play out. That's going to be our main target, the 1795. Of course, don't get me wrong, slightly above that we do have that psychological 1800 level. However, for now, guys, the main focus will be on this little short-term upside line. Now, the downside scenario, if we get a drop below this upside line and we see a break below this 1723 territory, roughly around here, then yes, maybe we could consider some lower levels. However, still probably the more comfortable level, a break of which could kind of trigger maybe deeper extensions to the downside, could be maybe around here, around the 1680 zone. So as you can see, it acted as a very good area of support previously. So we could keep an eye on that one. But we'll start considering lower levels if we get a drop below this 1723-22 zone, roughly around here, then we'll take it from there, because we want to see how this 21-day EMA will play out, because as you can see here, it also acted as a good area of support. So that's why we'll be a little bit more on the cautious side, of course. So that's why I was saying that to get a little bit more comfortable with further declines, we would need to see a drop below the 1680 zone. But again, that's in terms of the downside. For now, all eyes are on this upside line, and keep your eyes on the on these levels here, the 1748 zone, which is the highest point of April, and of course the 1763 territory, roughly around here, which is the low of the 1st of October 2012. Now then, silver, very quickly on silver. Here the situation is quite interesting as well. So silver looks a little bit better than gold, and yesterday I've talked about silver as well, and I was telling you guys to keep a close eye on this barrier here, the 17 point let's round it up to the 17.60 zone. And what I was saying, that if we reach that area and if it provides resistance, then we may see a bit of a decline, which we got. And this morning we're seeing another push higher. However, to be honest, it will be quite interesting to see if we actually can continue rallying like this strongly to the upside. I mean, maybe we could see a bit of a correction first and then a push higher. So that's why probably we'll take a bit of a cautious approach here. And in order to get comfortable with higher levels, we would prefer to see a push above the 17.60 zone. So, and as I've mentioned yesterday, guys, if, for example, this right now starts pushing higher strongly to the upside here without kind of retracing first, then if we get a break above the 17.60 zone, be very careful. It might get a hold up somewhere around here, maybe near the 18 mark, and then drift back down. So we've seen something like this happening before. So yep, that's why that's why if the commodity starts pushing straight away to the upside and starts breaking the 17.60 zone right now, for example, then yes, like I said, be very careful. It might get a hold up somewhere here, maybe around this 18 level. But if it first, for example, if it travels a little bit higher, but then fails to move above, fails to at least even move towards the 17.60 zone and then starts retracing back down, this could be seen as a nice healthy retracement. 16.54 level could be a nice one to watch, but also keep your eyes on the lowest point of February, which is around the 16.39 zone, or in a way we could round it up towards the 16.40. And if this area provides support, I mean, it would still be above the 200-day EMA here, so maybe more buyers could still see this as a good opportunity to step in. So in other words, basically what we would like to see, probably, of course, this is right now, probably this is where we're going into something that we would like to see. But again, the market doesn't always do what we like to do. So yeah, so for now, we will keep an eye on this potential scenario. But that's in case if this 17.60 territory continues to provide resistance. If it doesn't, and like I said, that's where the first idea that I've mentioned here, where it could come into play. Of course, with the downside here, we would need to see a break of this upside support line taken from the low of the 18th of March, and of course also a drop below the 15.84 zone here, which is the high of April, could also do the trick for more sellers. So keep your eyes on that one. Brent Oil. So managed to reach, well, almost managed to reach our target here at 36.10. That's what we're aiming for. But in general, I'm quite happy with the analysis that I was doing in the past couple of days with Brent Oil. So it basically almost reached this area, this key area of resistance. Still has a bit of room here. It could overshoot it and test this downside line taken from the high of the 8th of January. But again, as I said, be very careful, because for now, overall, yes, we are still below this downside line. So in a way, the main outlook is more to the downside. However, we'll be very careful here. Like I said, if by any chance we get a nice break here through this downside line and a push above the 39.60 zone, which is the high of the 11th of March, then we will aim for higher levels, because this would also place the price above the 100 EMA here on the daily chart, and yep, higher levels could be met. But again, for now, guys, be very careful. Like I said, as long as it stays below this downside line, there is still chance for this one, still chance for the bears, I would say. So be very careful here, guys. In a way, let's actually probably adjust this a little bit differently. So this is what I'm going to do. I'm going to mark the upside here after a break of this barrier, the 39.60, and the downside we could start looking at now, given that it kind of shifted a little bit more to the upside. We can start looking at lower levels if we get a drop below the 32.21 zone, roughly around here. Is this the 32.21? I talked about this level previously, and if we get a move back below this, yes, we will start considering lower levels, because we would still probably be above the 21-day EMA here on the daily chart. But if it starts dropping below this to like below the 28.66 or even 27.18, then yes, deeper extensions to the downside could be possible. So that's why be very careful for now. Ripple Ripple, unlike Bitcoin and Ethereum, Ripple is still balancing near this area. So I talked about Ripple last week, and I kept on telling you guys to keep a close eye on this barrier, which is around the 0.20, 52, 53 zone, which kind of continues to provide resistance. So again, all this kind of activity here doesn't really paint a very good picture for Ripple, because the fact that it's struggling to kind of stay above this 0.2053 territory is kind of worrying us, and also it's struggling to stay above this 100 EMA here, which is also around here, which is coinciding with this territory. And another thing is that we're still below this short-term upside support line taken from the low of the 13th of March, which we've managed to break here last week. So yeah, guys, so for now basically the situation is a little bit tricky. So we'll keep an eye on this barrier, but as long as it stays below this barrier, there is still more chances for this one to drift back down. If we get a nice push above it and we see a daily close staying, if we see a daily close above this territory, then we'll probably consider a possible move higher. However, still, as I've mentioned before, the more comfortable level for us is a push above the 0.2357 zone, which is the highest point of April. So keep your eyes on that one, guys. Okay, so now then, jumping into a few pairs very quickly here, guys. So AUDJPY, we're seeing a nice push higher. So everything's kind of working out nicely. Yesterday I talked about this this pair, and what I was saying that in a way, keep your eyes on this downside line taken from the high of the 16th of January, and if it remains intact, then we could see another round of selling. But yesterday we saw a nice reversal here from this 21-day EMA, so which again acted as a good area of support, and yep, a push higher. Kind of it came close. It closed the daily candle near this downside line, and yeah, this morning we're opening higher, and the pair is trying to push above this 70.17 zone. So which I talked about yesterday, because in a way we need to see a nice good strong move above this, and ideally of course we would like to see a daily close above this territory. But let me just quickly jump into a 4-hour chart. Let's have a look at the situation. There we go. Yes, so although ideally we would prefer to see a daily chart, a daily close above that territory, but if we get at least a 4-hour candle close above this 70.17 zone, then in a way we could consider a further move higher here, maybe even going towards the this 70.43 territory, roughly around there, and yeah, we could take it from there, because like I said, for now it's looking a little bit more positive than negative. Let's see if the pair can drift higher towards the 17.43 territory, or even maybe even towards this little high here, just slightly above it, 71.51 zone, so roughly around the 50 zone. So yep, that could be a nice, very nice target initially, of course, and then we'll see how it performs after that, because we have the 200-day EMA here as well. So yep, be very careful. In case this starts reversing back below this downside line, still the more comfortable level for us is after which we could consider lower levels would be somewhere from around here, the 67.37 zone. A break below this, yep, could open the door towards lower levels. Quick update on US dollar against the Russian ruble. I keep on talking about this one, and yep, yesterday we came very close, or should I say we actually came to the lower side of this triangle, descending triangle, and we've closed the daily candle near, or should I say bang on the line here. And for now, of course, this is leaning a little bit more to the downside, as I've mentioned before. This is kind of looking quite good in terms of that everything's kind of looking as written in the textbooks. So basically a perfect descending triangle, a potential breakout to the downside. That's what normally happens. However, be very careful still, because like I said, we need to see that nice daily candle close below this in order to consider lower levels, because don't get me wrong, this could somehow reverse sharply to the upside and break this upper side of the triangle, and then start moving higher again. So that's why be very careful with this, guys. So we need to see a nice exit, a nice close outside of this triangle before we could consider a further directional move. So keep your eyes on this one. US dollar against the Turkish lira. Now yesterday it managed to reach this 23.6% retracement on the Fibonacci. I talked about this, and as you can see, it provided decent support together with this other level, other target, which I spoke about, the 6.8250. So we had a perfect hit of that area, and you're seeing we saw a bit of a retracement here back to the upside. However, of course, don't get me wrong, we're still a little bit more on the bearish side. However, we would prefer to see a drop below this 6.8250 level now in order to aim for lower levels, because this would confirm a forthcoming lower low, and further declines could be possible. That's why we'll probably stay a little bit on the somewhat bearish side, because we need to see a break of that level first on this level 6.8250, because we have retraced, let's say, a decent amount. Without, you see, how many days we had here? 1, 2, 3, 4, 5, 6, 7, 8 days already we had without any kind of retracement to the upside, without closing in the positive territory. So yeah, for now it's kind of still we're leaning more to the downside. However, a break below the 6.8250 zone would be required. USDCAD, quick update here. I talked about this one as well yesterday. So basically, this downside line continues to provide resistance, the ones taken from the 31st of March, and you can see that yesterday declined heavily to the downside and dropped below this level that I spoke about yesterday, the 1.40. So the psychological 140 zone, it closed below it. Now it increases the chances of a potential move further south, but we will only target this 1.3856 zone for now, because as you can see, it continued to provide decent support. And again, what we don't want to exclude here is a potential descending triangle here forming, the same as on the US dollar against the Russian ruble. So that's why we will keep an eye on this level for now. This is going to be our target initially, but of course if we get a nice daily close below this, then it could increase the chances of a potential drift south. And with the upside, of course, yeah, we would need to see a break of this downside line, and then we would aim for higher levels. GBPNZD, here the situation is quite interesting. Yesterday I talked about this one, and yesterday I was saying that we saw the pair drifting back up, but failing to move back above this upside support line taken from the low of the 30th of July 2019. So in a way, what I was saying yesterday as well, that we are leaning a little bit more to the downside as long as it stays below this upside line. So as you can see, drifted back down, but however, to get a little bit more comfortable with lower levels, we would prefer to see a drop below the a drop below the 2.01 30 territory, roughly around here, and then also in addition to that, ideally we would like to see a nice good daily close below the 200-day EMA. So keep your eyes on this one. EURCHF. So this was a nice explosion yesterday evening to the upside, and this is what I talked about yesterday in one of my videos where I was covering EURCHF. We were still basically hanging around here, and yesterday we managed to even drop below this key area of support near the 1.05 level, and but as you can see, the bulls quickly pushed this one back up. And what I was saying yesterday as well, that if we get a nice good move above the 21-day EMA, then yes, further acceleration to the upside could be possible. But I mean, didn't quite expect such an acceleration, so we managed to overcome the high of April 28th, and also some other highs of May, created a new high for May, and that, let me just quickly mark this on the chart, and that was roughly around here, the 1.0662. So yeah, I mean, it's now looking quite interesting from the buyer's perspective. This could potentially push further north, but again, that's only from the near-term perspective. From the short-term perspective, because we are still below this downside line. Because don't forget that, guys, if this downside line is, by the way, taken from the high of the the 23rd of April 2019. So basically the highest point of April. If that downside line gets broken, then yes, this could mean that the trend has changed, and yep, we could start moving further north. However, again, guys, for now, be very careful. Yes, we are, like I said, leaning a little bit more to the upside. However, for now, only from the very short-term perspective, because we do have this downside line to overcome first. And finally, Euro USD. So this one popped higher fantastically to the upside as well. And the most important that yesterday I talked about this level here, the 1.0875. I was telling you guys to keep a close eye on this barrier, because if we get a nice daily close above it, then yes, it increases the chances of a potential move further north. Now, further north within the range, because don't forget that we're still within the range between the 1.0777 and the 1.0990 zone, roughly around there. And for now, we will target only the upper bound here, and we'll take it from there. If it wants to break this upper bound, then yes, that's wonderful for the bulls. We could see this one pushing further north. However, again, let's be very careful here. Let's be a little bit on the cautious side. And yeah, for now, we will target this this barrier, the 1.0990, and yep, we'll take it from there, guys. If by any chance somehow this reverses sharply back down and drops back below the 1.0875, all this territory again will make us a little bit more neutral. For us to get excited with the downside, we need to see a drop below the 1.0777 and ideally a daily close below that area, because we don't want to see another false breakout here as we had here before. So guys, that's it for this session. I hope you found it useful, and I really appreciate your time, guys. Thank you very much for joining in, and like I said, really value your time. Be very careful today. So we do have a bit of data coming out. So we have the European ZEV economic sentiment, German ZEV economic sentiment. So that's something to keep an eye on, and of course the testimony from the Fed Chair Powell. So yeah, later on in the evening, in the European evening, and yep, so keep your eyes on that one as well, guys. Be very careful, and I hope you stay safe, both financially and health-wise. So keep your eyes on the market, guys, and join my video, my traders tea time video later on at around 13:15 GMT time, and yeah, we'll have a look at some of these instruments, some new ones, and we'll take it from there. Thank you very much, guys, and have a wonderful day. Bye bye.